Hey folks, Dan Frio here with your market update for September 10th, 2024. So in today's video, we're going to talk about the economic calendar that's coming out this week. There's nothing today, but tomorrow starts a lot of information that the Federal Reserve is going to monitor, and that's the CPI and the PPI. I'll explain all that to you in just a second. How the bond market's reacting to this, how the stock market's reacting to this, what the CME Fed Watch tool's telling us. Are they going to cut 25 or 50? And then the latter part of this video, I'm going to answer a question for you guys. A lot of people ask me, it's like, Dan, why do you do all these videos? Why are you on YouTube? Why do you do this? So I'm going to explain to you how I got to my journey into YouTube, and it was an intriguing kind of path how I got there. So it's a little bit intriguing. So let's get to it. Right here, here's where mortgage rates are for today. I love saying this the last 2 weeks. Mortgage rates are down a little bit, folks, and they continue down that trajectory. We got the 30-year fixed down 2 basis points, 15-year fixed down 2 basis points, and then we have the Govy loans a little bit up right now. But what's going on in the background? Well, there's no news today. But tomorrow and Friday, or tomorrow and Thursday, a slew of information. What is it? We got the CPI, the PPI, and the initial jobless claims. You might be saying, Dan, what does that mean? Well, think of the CPI. That means consumer inflation. The C on the front of that, think of it as consumer. The PPI, think on the front of that is that there's a P, so they think of that as producers. So tomorrow we're going to get consumer inflation. Thursday we're going to get producer inflation. Then we're also going to get initial jobless claims. So all this information is very much in the radar of the Federal Reserve. So let's get over to here. We have the former Fed official from, I think it's Dallas, coming in telling us his take on this. I want you guys to take listen to his take. Then I'm going to give you my take on what I think is going to transpose, and then we're going to continue on with the rest of this video. So take it away with the Fed's former Dallas Fed official. We can get his take on this. So take it away, Becky.
All right, welcome back, everybody. CPI is due out tomorrow morning at 8:30. Ahead of that, we want to welcome former Dallas Fed President Richard Fisher. He's now senior advisor to Jefferies. He serves on the boards of Tenet Healthcare and Warner Brothers Discoveries. And, of course, he is a CNBC contributor. And, Richard...
And have been for 20 years.
Yeah, we were just talking about this. It's been 20 years since your first Squawk Box appearance.
October 13th of 2004. And I was the host.
We
guest
love having
host.
you here.
Guest host. Don't guest host. Don't pad your resume.
Oh, I'm so desperate to do that.
Does it come to that? You're on the Fed, for God's sake. But your claim to fame, you are hosting Squawk Box.
Well, you know, that was a year before I went to the Fed.
Fed is better.
All right. I agree with you on that. Okay.
So if you were in the room next week making this decision, what would you do? Would you cut 25 basis points, 50 basis points, and why?
No, I would argue for 25. First of all, you don't want to send a signal of worry. The Fed doesn't worry about politics, but you know darn well if they did 50, one of the candidates, you know who I'm talking about, would be all over screaming about the Fed. And I don't think we are slowing down. There's no question about it. We still have positive economic growth. Inflation's coming under control, but we're not fully there yet. But it was pretty clear after Jackson Hole the change in direction that's taking place. So 25 basis points would be my argument.
And even with politics, I was trying to think about it. It's hard to imagine either candidate complaining about a rate cut right now. It's so
Since
close to the
they've both been hammering the table to get one.
saying that they want one.
Yeah.
I'm coming through
anyway,
on this.
Politics
is weird.
Trust me, they're indifferent to politics at the FOMC. I never heard it discussed in 10 years. So, I mean, the real issue right now, and I've talked about this a lot, and I'm always surprised at where things are trading, is how do we finance our deficits? The Treasury auctions have actually gone fairly well. We've been very lucky that we have so-called households, which are really foreign flows. Pension funds, insurance companies have been buying the 10-year and buying other debt. But our interest costs now are $2 billion a day.
Yeah.
And the other thing is they shifted to Treasury bills. This is at the Treasury. This is Secretary Yellen.
Pay attention to this one.
And 22% of the refinancings are in Treasury bills. That's 5% money. So if the Fed does cut, that'll assuage that pressure a little bit. But it used to be 2% money.
Do you think that if the Fed cuts, that's going to be okay with all the buyers who have been showing up? They'll say, okay, we'll take less for what we've been floating you, or you think there's a point where those
that are
buyers
holding 5%
disappear?
paper will be very happy.
Yeah.
You're looking at one of them.
Yeah.
And I don't know anybody that I know, an investor that hasn't put money in the short term, 1 year or less, or 2 year or less. And those rates have come down, so the returns are pretty nice. for totally risk-free paper.
Totally risk-free. The returns in the market have been pretty good, though, if you're looking at equities.
Yeah, that's been helpful. And so that's another reason I would argue for 25 basis points. We still have accommodative markets. We've had some shocks to the system, but if you look at all the ratios, the spreads, and so on, we're still pretty accommodative.
So you think the economy's in a decent point, too? Because we have a range of people who come on this show, some of who think, yeah,
well,
this is the
your previous
continuum.
guest was talking about, recession obsession. We've had this for years. And what I get a kick out of is we had the 2 to 10 was inverted. And everybody said that's the signal for...
Now it's uninverted.
Now it's positive.
I know.
So what does that tell?
That's when it's supposed to happen, though.
I know that, and that's historically what has happened. But still, I got a kick out of that negative argument, saying we've been talking about recessions for 2 years.
Well, eventually we'll be right.
Yeah, eventually we'll be right.
Kind of
right,
like
welcome back,
the
everybody.
housing crash everybody keeps talking about. Eventually, they're going to be right year after year after year. And if you want to take a kind of a dive down that, check out this video that I just put out there. Basically, I was kind of giving you what I predicted or what I forecasted May of 2023. Check that out. Was I wrong? Just giving you a little bit of a tidbit there. So that's what we're seeing right through now with the interview with the former Fed. He's basically just saying that they're going to come out and do 25%. I'm saying they're going to do 25% unless some of these numbers that come out in the next couple of days are completely shocking. The Fed won't do 25. They won't do 50 basis points. They'll do 25 basis points. So again, but a lot of this stuff is on the radar right now, and we're going to monitor this every day up and through the Fed's meeting. So that's what's going on right through there. How does the market react to the news right now? There's no news and there's no movement in the bond market. So we have the bond markets basically at zero right now, meaning rates are going to just stay completely stagnant from where they are. Let's look at the Dow Jones. The Dow Jones picked up, 500 points yesterday. It's giving some of that back now. But the rest of the markets through here are flat. Cryptocurrencies over through here. I did gain a little bit of money on this one, but they're down 300 points. I picked this back up at about 55,000. Not telling you guys what to do on this. I'm just telling you, I picked up some Bitcoin just recently at a little bit of a discount there. So let's see what the oil's doing, because you guys know how I love oil. It is $66 a barrel. This is going to be fantastic for inflation. So we got good news there. Let's go to the CME Fed Watch tool. What's the numbers look like right through here? So here's what we're seeing right through now on the Fed Watch tool. It's basically now 73% that there's going to be a 0.25% cut. So the CME Fed Watch tool basically just gives us some insight of what the Federal Reserve's supposed to do at the next meeting. And here's where the rates are right through here. The top section through here is where the federal funds rate might be, or the projections. So if to read this, like for example, right through here, you're seeing 500 to 525. That means 5% to 5.25%. Right now, the federal funds rate is 5.25 to 5.5. It would be a sell right through here, but it's gone because they're saying there's a 73% chance they're going to cut rates 0.25% down to 5 and 5.25. Then at the next meeting, there's over an 80% chance they're going to cut an additional 50 basis points at the November meeting. But again, it's going to be completely data dependent. Okay, so that's the report today. We really have no economic news out there, but then I want to show you just a couple different things. How and why do I do this? Okay, so here's what happened. I just want to give you some context. I never really went into YouTube to kind of do this as my mortgage basically platform. So what happened was about in 2010, I began advertising. I had an offer to start advertising and have a little show on a Christian radio station in Chicago. So I did that. And I did that. I was the longest running advertisement or advertiser on that Christian radio station. I was on there for 15 years, and I started doing Christian ministries and doing a whole bunch of things within that platform. I am still 100% committed and in, but I had to pull off of the radio station during COVID because they couldn't facilitate me going to the studio every day. So I actually had to create a studio in my office and in my home. So thus what created this stuff. Okay, so that's what actually brought me over to YouTube, because I stopped advertising or stopped my show on Christian radio. You can even go to websites or blogs and podcasts and things like that. Like I'm on iHeartRadio. I post every one of my shows on podcasts. So I'm on Apple Podcasts and iHeartRadio and all these other things. So that's basically what got me here. So my whole goal, here's my goal behind this, is to educate, inform, and help you guys. Okay. So part of the Christian faith is you need to be a good steward of your money. My goal, my whole goal here is to help you do that. So we're gonna start talking about other asset classes, not just real estate. You know, is there any bond funds? Should you invest in bonds, stocks, ETFs, cryptocurrencies, things like that? That's what we want to talk about on a daily basis. So I'm going to plug in some things here and there to give you a little some tidbits on what I'm doing to help educate you guys. And if you have any questions about things like that, and you want me to start doing some specific videos about, maybe what a mutual fund is, what an ETF is, things like that, just ask down below. I would love to be able to put that content together for you. So that's why you can find me on all iHeartRadio, Apple Podcasts, things like that. But if you go to my channel, there's over 3,000 videos. I do these videos, I write these videos, I film these videos, I edit these videos, and I post these videos. I do my thumbnails and everything else. So there is nobody else involved in any of this stuff. It is strictly me. Every day I come in, I do all my research. I do research all day and every day. I do my videos, I edit them, and then I post them for your enjoyment in your educational pieces. So that's basically why I do this, folks, is to help and educate in making you good stewards of the assets that God has provided us. So that's the reason why I do this. How do you find out more about me, or where do you go to find me? Go to therateupdate.com. Here's my website. Okay, so if you're out there trying to buy your first house, maybe your first investment property, maybe you're looking to refinance, maybe you got to consolidate some of your credit card bills because you got a ton of equity in your house and you're just drowning in debt, I'd love to help you. Okay, go to therateupdate.com. If you're looking to buy that first house, the thing I need you to do is hit the grant finder right through there. This is going to give you two grant search engines. One's for national grants. One is for the Chicagoland area. So you're going to capture all that details there. But if you check out that, if you want to put in your application, you can just click the apply now button, or you can scroll down to the bottom of our website, which is right through here, and you give us a call at our 800 number. 800 number is 844-775-5626, or you can email me directly. Yes, it's me, and I will be the one answering. You can email me at dan@therateupdate.com. So thanks so much for watching, guys. God bless. Have a fantastic afternoon. I'll see you back here at the closing bell. Take care. Have a great afternoon. Bye-bye.